Hello there, this is fairbinaryoptions.com. So let's write here that this is fairbinaryoptions.com, and what we have here is the euro US dollar ahead of the FOMC statement and Fed projections. And I would like to point out that we are in a delicate situation, and I would like to buy put options, but not from these levels, after a bit of a spike higher. What does it mean? Does it mean that the Fed is not going to announce, or does it mean that the Fed is going to still keep the considerable time words on the statement? We don't know that. What we do know is that we have two different scenarios on the euro US dollar, and both of them point towards higher values to come. First of all, the whole move, the impulsive move, I would say, starts from here, and what we have is a first wave that is done here at the high. So this would be wave 1, like this. Then we are looking for a complex corrective wave in the form of a second wave that is either being completed here as a double 3 running, or it is actually being completed with these lows here. We don't know that, but based on that we should look at the extended level, or the extension to come 161.8 when compared with the first wave here. If the second wave is done here, then the scenario for the second wave is a running correction, and it is labeled like this: A, B, C as the first correction. Then we have the X wave to the upside, and then a contracting triangle that goes A, B, C, D, like this or like this, E in here, and then we should look for a 161.8 when compared with the first wave. Well, if you measure the first wave, if you take a Fibonacci retracement or expansion, actually doesn't matter, and you put from the beginning of the first wave till the end of it, and till the end of the second wave here, you are seeing that actually 161.8 extension already came, and it means that we might already have the third wave to be done here. So 1, 2, 3, and if that is the case, then normally the move now to the downside should be a simple correction, as this one is a complex correction. So it should be a fourth wave to be done here. I would say it is looking like a zigzag, so in the form of a zigzag. But if this is the fourth wave, then the fifth to come cannot be longer than the first wave anyways. So all we have to do is to measure the length of the first wave here, and then to project it. Let's make it of a different color, and then to project it on the upside in here, and that should be the maximum value that market should go on. That means 25.45 would be the maximum value that the market should go. In this case, the fifth wave to come should be a fifth wave failure. So the impulsive move is an impulsive move with a fifth wave failure. But when you have a fifth wave failure, this goes hand in hand with the third wave extension, and with the fact that wave 5 is equal with the first wave always. How about the other scenario? So in this case, I would like to go and buy put options after market comes into 25.50 level here. How about the other scenario? Well, the other scenario is that the second wave is not done here but done here, and I will make the other scenario with a different color so that you can see it. So again, this to be A, B, C, then the X wave, everything goes alright up to this moment, and then we have the contracting triangle that is only completed now here, that we have wave A to the downside, then the B wave, then the C wave, then the D wave, here the D wave, and this to be the E wave. So the D wave to end with another triangle of a lower degree. So this would be, out of this scenario, so the A and C and the B to D trend line should be this one. So this should be the B to D trend line like this. This should be the A and C trend line, And in this scenario, it means that the extension level that we have should apply from this moment of time and not from here. It means that the extension with the Fibonacci should go like this. You take the Fibonacci expansion. From here, we go first wave, and then the second wave here with the recent lows. And it means that 161.8 now goes all the way up to 126.05. So if there is the third wave of the 126.05, then there is another moment that I would like to buy put options as well. I would say that the key comes with the 25.50 area. If you see that the euro US dollar is moving more than 125.50, then wait until 26 comes for buying put options, because if there is the third wave, then we'll look over a fourth or fifth and then another move lower. All in all, this being in the end in the second half of December, I would choose end of month expiration date, as market will experience great deal of volatility. So let's write here what is the plan for the euro US dollar. Well, the plan here is to buying put options by the time market goes 1.2540 and 1.26 with end of month expiration date. In either situation, this euro US dollar looks bullish on the, let's say, medium to long term, but on the short term I would like to buy put options for a correction into this area to come after the 125.50 and after the 126 level. Thank you very much for being here. This is fairbuyingoptions.com. We just made a small trading plan for the euro and the US dollar. Bye bye.